today I want to share with you in this video presentation will be available in YouTube is on the fundamental side and what is PE. I'm sure most of you have heard is what is PE and these are one of the fundamental, but really how do you look at PE? I'm sure most of you have heard is what is PE and these are one of the fundamental, but really how do you look at PE? So what is PE first? Let me just write it down. What is PE? Now PE stands for price earnings. Okay, a lot of time people look at PE or PE ratio or the number of times. The number of times that the price is more than earnings. Now let's say if the company is earning 1 ringgit earnings per share and they earn 10 and the price currently which is listed in the Bursa Malaysia is 10 ringgit. So what is that? The PE we are looking at is actually PE of 10. So how do we look at it? It's like this, yeah? So you have price, okay, per share, okay, divided by earnings or EPS, or in other words we call earnings per share. So let me go through it with you again. Now, if the price of the stocks or of the company in this case is 10 ringgit and the earning is 1 ringgit per share, which is the earning, so the PE would be, if you look at here, will be 10 ringgit divided by, this will be 0 and 1 ringgit per share. This would give you a PE of 10 times. Okay, so this is how we look at the PE of 10 times. I'm sure most of you during the recording would heard the recent listing of the Facebook. Now, do you remember what was the Facebook PE like? The Facebook for PE like is almost, let me just show you, right? Is 100 times PE. Okay. Now, if you look at it, a lot of people are saying this is really a good company, Facebook, because they've seen a lot of potential, a lot of growth in it. But however, if you compare this Facebook, okay, to Apple, which has a product, as well as Google, okay, which has, they were only trading around 12 to 13 times PE. So you may say, how do Facebook justify 100 times PE compared to Apple and Google, which already have existing market share? So that's why during one of our consultation with our client, we did tell them, look, don't get Facebook. Now Facebook has a PE of 100. That is almost 5 times to 6 times more expensive than Apple and Google, where they have an iPad or an iPhone. So Facebook is all about hypes, and as a matter of fact, some of my clients did call me up, should I buy Facebook? We told them, stay away from Facebook. If you want to make money, stay away from Facebook. And luckily for us, it did came through, and you know where Facebook is. It fell off almost 30% to where it is in time. Now, let's look back at the Facebook example. PE is also another way of looking in terms of number of times that it takes for you to recover or recuperate all your investment. Now, let's say we have a PE of 10 times, okay? Now, assuming earning don't change over the years. This year, year 1 is earning 1 ringgit per share. Second year is earning 1 ringgit per share. And third year is earning 1 ringgit per share. So you have the PE of 10 times. Okay, sorry, the PE of 10 times, and your price, okay, let me just go back. Okay, let's go down. Okay, you got year 1, okay, is earning of 1 ringgit, earning per share. Okay, you got year 2, earning of 1 ringgit. Assuming this doesn't change, year 3 up to year end is 1 ringgit. Now, if you have, okay, what we call a PE of 10 times, okay, what does it mean? It means it will take 10 years, approximately 10 years to recover your investment that you have, because assuming that they pay you back the earnings, which is 1 ringgit earnings per share. So you need 10 years, because upfront now, let's say you invested of a PE of 10, it will take you 10 years. Now that's how we look at PE. So imagine if you bought Facebook, which is 99 PE or almost 100 times PE, how long does it take you to pay you back? 100 years. Do you have 100 years to live it? I don't. That's why I tell my clients to avoid it like nobody's business. Okay, another way to look at price earning is also people always commonly ask me, should I get the PE of below 7? That's highly talked about in one of my articles in the monthly comment issue for June 2012, where we actually look at PE below 7. Now, in my book, the Supercharge book, I always tell readers as well as investors, look for companies which is PE below of 19. Okay, PE below 19. Okay, and PE at least above 6. Okay, now this is important because reason why, if the PE is below 6, that tells you something is not right about the company. It's cheap. Now, company cheap can always get cheaper. That's what my mentor always tell me, Wwealth.my. It can always get cheaper, right? And for PE that is way what we call expensive, okay, above. Sorry, this one is expensive. Let me just write this down. If it's above 19, right, I would say it's a bit expensive. And so we want to keep to the level between 6 to 19 and avoiding any to 21. Now remember, PE, another way to look at it from my analyst friend, Mr. Pong from Jupiter, always tells me too. Now, if you're seeing PE which is above 30, that we're seeing a lot of the big companies, oil and gas, which is happening in Malaysia, those are already overpriced. Now remember, when the overprice combined with volume spread, that will tell you probably a sell signal. Now another thing you may note recently is the PE also tell you about the branding. The branding, for example, a newly listed company that comes out may have only a PE around 4 to 6. That's how they justify, because they don't have a brand name. Now branding is because as the stocks is longer and has a track record of earnings, a regular growth in earnings as well as sales, then the PE would moderate up to the 19s or 20. Right? When you go up to 30 or 40, to me, that's really, really silly and really, really expensive to actually be getting in. So you see a lot of good companies like Pet Gas, what else? GAB, Guinness, Carlsberg, even to a point, Nestle, BAT, all these consumer items, all those PE are actually above 20 and 25. They justify it because they have a track record. They have a track record that they will continue to earn. Now remember, a lot of these earnings are based on organic growth. People still need to eat, right? You still need to buy milk powder for your children if you have baby, and people who smoke will need to buy BAT. So that's why they can justify a higher PE around 20 to 25. And one way to look at where are all the PEs available, you can look at the local newspaper at the middle section if you happen to have any, and always come with it. Now remember, a lot of these PE are actually historical PE. So that's all I have for the what is PE is all about. You can, if you have any more questions, you can email me or send me a message or feedback to the email where will be listed in this video in here. So with that, that concludes my end of my presentation for what is PE and